Multifamily is personal as far as I'm concerned. The average problem some of us have is because our goals are not smart. Whatever plan it is that we have for multifamilies must have the smart approach. Hello, everybody. Happy New Year to, I think, everyone. I've not spoken to so many of you since. I think we saw in the activation Zoom, but this is our first asset management meeting. And today's going to be kind of different. Normally I always do the entire talking, but today we're going to use somebody's scenario to walk our way throughout this session. Yeah. So I'll randomly pick somebody, and the idea and the purpose of this meeting is for us to set our multifamily goals, creating a roadmap, applying reward scenarios, and measuring success. So that is the major reason why we are doing this. Now, some of us came into multifamily because we feel that it's all bed of roses. I can become financially free. We are seeing all the shiny objects. Everything looks so pretty. Oh, these people are doing well. They have 2,000 units, 50,000 units, and so on and so forth. And it just kind of starts packing up some things in our lives, and we just want to jump into it without even evaluating and saying, how does this relate to me? Because really, multifamily is personal as far as I'm concerned, because we all know, or some of us know, that it's an avenue for us to get to financial freedom. But for me, it's my major vehicle to financial freedom. So the idea of we not sitting down to really understand the implication of the decision we are taking might not be too good. We did something last year, Ify and I, on team in 2024. In short, we started it in 2023, where we somehow bring people to our team to observe us and all that. Initially, we're just doing it to support people to just come into multifamily and all that. But after a while, I always go back to ask them questions like, what do you think? Do you still feel that multifamily was what you thought it was? And I get the same response, oh no, it's difficult. I didn't know it was going to be this way. And most of the reason is because some of us don't know our plan. We don't know the end goal. We are just diving in and just taking it one step at a time. So today we're going to work our way backwards. We're going to determine our goal and work our way backwards and to know if this is really a good fit for you, if it's something you should be doing, or just concentrate on your W2. So Reggie, I'm going to use you as my guinea pig today.
Wait, did you tell him ahead of time?
I did not tell him.
Unfortunately, I can't come off mute.
Oh, I'm hearing your voice. Okay, so Reggie, we're going to do something together. And just be sincere. The reasons for people to go home and go back home and start reflecting if they started out the right way. So Reggie, before you started this journey, I think I remember speaking with you on one of our calls. And for you, what's your goal? What do you think you want to achieve by the end of this year? Just say it as it is. Don't sugarcoat it. Just be plain.
Yeah, so I'm already LP in several positions, and a very simple goal, obviously, is to acquire an asset this year, a multifamily asset this year.
Okay, so your goal is as simple as just acquiring multifamily asset. And is there any reason for that? Why are you doing it? And why did you even decide to invest as a limited partner in the first case?
Yeah, so I grew up in the old time frame where you go to college, get a degree, work 40 years, retire, sit at home, and stay there till you die. And so I know that process is not going to be conducive for what I want my children to do going forward. And so I want to leave a legacy for them to know that entrepreneurship is a possibility for them, and that they can branch out at a much earlier age than I did, and produce the type of wealth that allows you to do things, charitable things in the community, as well as providing for your family. So for me, good. One of those things is to support mission work across the globe. And so some of the...
Bridget, we're going to be very fast.
Okay, sorry.
We only have 30 minutes. Yeah, so now we've seen your purpose and why you're doing it. Do you have a figure in mind? How many units do you want to do in 2025? And what is the amount you're looking for in 2025 that will get you to that goal?
I was looking for at least 200 units.
200 units? And is there any plan in place for you to get your 200 units?
Yes. So I've been working with several different partners looking for deals already. We've been fairly close on several had a couple of LOIs that we didn't get to best and final. So yeah, we have that process in place already.
Okay, so what amount are you looking for? Are you just looking for deals without because that should drive the number of units?
Yeah, so do you mean like overall total or for each property purchase, like individually? Like, say, for example, we're willing to buy 50 unit properties and accumulate those, several and get above the 20 or 200 goal that I have for the year. But I know that above 100 units seems to be a lot more competitive for bigger players. And so what we've been looking at above that has not penciled out for us in terms of getting the returns that we want for investors. So we're looking into a smaller space.
Thank you so much, Reggie. And I'm going to put some holes in the things you said. The average problem some of us have is because our goals are not smart. Some of us are familiar with the SMART goals and all that. And it's very still the same application for SMART goals that you have for your job that you still have in multifamily. It's the same thing. It applies the same way. So for multifamily, I remember when I started, I was saying that because I started from single family, I had about 50 single families. And because I did 50, I doubled it the second year and all that. So when they asked me, how many units do you want to do in the next year for multifamily, I said 1,000. And a lot of people were laughing and all that. And truth be told, yes, that was very laughable. Not as if it was unreachable, but why was I looking at getting 1,000 units? I think as at that time, it was more of the numbers because of what it could do for me. So now the idea is our plan, whatever plan it is that we have for multifamilies, must have the SMART approach. Specific, because I asked you a question, you were not that specific in exactly what you wanted. I didn't get that number from you. So if you ask me, Bibi, what are you looking for in 2025? I can say, I need 100, I need 50 million in 2025. That's an example. I'm that specific. I need 50 million. So, okay, you need 50 million. The next one is measurable. Now, the question is it achievable? How can I measure it? At what point do I know that I've gotten to that 50 million? The next thing about it is achievable. At my level, do I have the capacity and the ability? Do I have the deals that can cash flow that will give me 50 million within 12 months? The next question I should ask myself is, are they very realistic? With everything that is going on, with the interest rate that is very high, with the number of partners I have, with getting investors, because it's becoming very difficult to get investors to invest, with those things on ground, is it really sure I can close on 5 deals that can give me 50 million, or whatever that figure is, or 50,000, let me know it's million, 50,000 in 2025. Will I be able to get that? Then time, I need to get that between January and December this year. So by the time I looked at those different things, I will start thinking and start scaling down my number of units. So to be realistic, if I was new and they asked me my number, I would say, okay, maybe I need to make 10,000 a month or 15,000 a month. Now the question is, if I need to make 15,000 a month, that means if someone offers me a deal and the deal is about 7% cash on cash, that means in a year I might be making about 7,000 on that deal. So if I'm making 7,000 on that, remember the goal is 50,000. So 50,000 divided by 7,000. So I need how many more deals for that to happen? Let's do the maths. 50,000 divided by, let's say, 7. So let's say I need about 7 more deals for that to happen. So now the question is, will I be able to close on 7 deals that have almost similar abilities that can give me that cash flow? The question is, the probability is no, because one, for you to get a good deal is sometimes very difficult. You need to underwrite so many deals. So for you to say 50,000 in 1 year and you're just starting out, it's a different case for someone that's been in it for long because the person has already built a business around it. Those things can be achieved. So now for a brand new person, you can say, okay, I might not be able to get it from cash flow. Maybe part of it can come from acquisition fee. But how much? I'm a newbie. I have many experienced people on the team. They're going to take the large chunk of the bigger amount on the acquisition fee. How much will I get from it plus that? By the time you look at the entire scenario, you might need about 3 or 7 deals for you to get to your goal. So like I said, your goal needs to be very smart. Some of us are very concerned about the number of units that we have. I've seen people closing on units and they don't even mind if they have 0.01% ownership on it. And truth be told, I don't do those kind of deals that gives me that 0.01% because for me, it's not about just jumping on deals. It's about the quality, not just the quantity. So some of us are concerned about the quantity and not the quality. property. You also mentioned you want to do 200 units. And who says that if your goal was I want to make 5,000 a month, that 50 units cannot give me 5,000 a month? Who says? So the bottom line of what I'm saying is our goal needs to be very, very smart. We don't need to start looking at others, because there are things that happen with people that we look at up to as mentors, because they have like 5,000 doors, God knows how many doors, anyhow, and we keep jumping into many deals. And those deals, some of them don't even give us the kind of result that they want. And don't forget that the reason why you're even investing is for you to be financially free. And if those deals will not move you one step ahead to that financial freedom, there is no reason why you should be on those deals in the first instance. So I'm going to give an example. Let's say my goal is to have 100 units in 12 months with an average cash on cash of 8%. So an average cash on cash of 8% typically is about 8,000. I just want a deal that will give me 8,000 for that year. That is the goal. Let me say my year one goal. If I'm to do that, I will go through the entire phases that I just discussed with us. That goal must be smart. One, the goal is specific because I've been able to determine 100 units. I'm sure of my 100 units. I'm sure of the kind of return I want, 8%. And now I'm saying, is it measurable? Yes, it's measurable because I said it's 8%. So any deal I see anybody brings to me that does not have 8% tagged on it is a no-no. So the next one is, A, is it achievable? Yes, it's achievable. 100,000 units is not far-fetched. It also might be very difficult for a newbie, but if you have the right partners around you, is 100 units achievable? Yes, it's achievable within 12 months. Now the next question is it realistic? It is very realistic for you to close 100 units in 1 year, because it's not a bogus or unrealistic kind of deal and time. Is it achievable in 12 months? Yes, it's achievable in 12 months. So once you're able to determine that we've been able to work our way from the beginning to the end, we know our end goal, we are looking for a particular amount, percentage on a deal. If we don't have it, it does not fit our criteria. So that is what I always tell people, because people see different deals and they really don't have a particular reason why they're saying no to a deal, even when everything is good. But sometimes it's just because of maybe one, the outlook, or something else. They just come with some reasons, but it's not based upon a goal. If it's meeting their goal. My point here is, if it does not meet your goal, then don't do it. Now, there are 3 pillars of multifamily planning. So after being sure of what you want in multifamily, the next thing for you is to go through the 3 pillars of multifamily. And what are they? One, I've said I wanted 100 units, 8% cash on cash. The next thing I need to do is for me to do my market research. Now, not all markets can give you that kind of return. And let me explain what that means. I'm looking for 8% cash on cash. That is a good kind of amount for you to say you want, and not all market has the ability to give you 8% cash on cash. For example, in my own experience, California might not give you that, because some part of California market is based on appreciation, not on the cash flow of 8%. Some deals don't cash flow there, but some people just buy those properties because they know it's going to appreciate over a period of time and they will sell off. So if my goal is 8% cash on cash, somebody is bringing a deal from California, no, I'm not going to do it. But if somebody is bringing a deal from Texas, I'll look at it because there's growth. You can actually get a property here that can cash flow. If somebody is bringing a deal from Ohio, I will take it. If somebody is bringing a deal from Arizona, because the market research tells us that those markets have the ability to give us the kind of returns that we are looking for. So that is one of the things we need to do. We need to look for markets that have population growth, job opportunities, and rental demand. Those are things we need to start looking for in a market. Like I said, from the beginning of what you want to be determine the kind of market you want to be. So some of us that are used to buying a property just behind our house, just at the back of your house, if your market is good and you're good, because I'm in Dallas and Dallas is just the back of my house, but if Dallas was not meeting my goal, I would not be investing in Dallas. For the fact that I stay in that does not mean I should invest in Dallas, but because it's at the back of my house, one, and two, it's meeting my goal, that's why I'm investing here. You need to look for a market that suits your long-term plan. Now, the second one is your team. And this is one important factor. The reason why you need to look for your market first before you build your team is because the team is the most important part of the entire thing. And it's where your market is really, you want to really build your team. It does not mean that some team members are not nationwide and all that, but you want a local property manager. You want a lender that understands that market as well. Because I've seen cases whereby a lender will give you a quote and they will go back and retrade it. They will come back almost at the time when you're closing and they'll give you another quote. Maybe they didn't do their tax finding very well and all that. So sometimes getting these things local is beneficial to you, your insurance broker and all that. So after choosing your market, the next important thing for you to do in setting your goal is your team members. And those are the brokers, the lenders, the property manager, all these third party people I've referred to are very, very important. And without them, you reaching your 100 units in 1 year might seem impossible because they're the ones that will help you expedite the entire process.